Hey there. So in this video, I am going to be talking about one of the ways that you can buy Bitcoin in the traditional investment world, or in other words, the stock market. So on April 9th, 3IQ, which is this company here, this fund company, they came out with something called the Bitcoin Fund, and it's listed on the Toronto Stock Exchange, and this is their ticker, so QBTC.U. So they listed out this fund on the TSX, and basically the way that this fund works is they will buy Bitcoin and then they will uh, give it to Sidel Trust Company or Gemini Trust Company to then hold on and to take care of those Bitcoins uh, for this particular fund. And so when you buy QBTC, you're buying a share of this fund. You're not actually buying Bitcoin. You're buying shares of this company or of this particular fund, rather, that is representative of a pool of Bitcoin that is owned or uh, that is held rather by Gemini and Sidel. Now, for those of you who don't know Gemini, it's they are owned, or the Gemini Trust Company is owned by the Winklevoss twins. The Winklevoss twins are they've been around in the crypto space and the Bitcoin space for quite some time, and they actually own Gemini Exchange, and that's a quote unquote by the books or a regulated crypto exchange, and so yeah, so basically the way that this fund works is you buy shares of it, of a pool of Bitcoin that is owned. So you're not actually buying Bitcoin. So um, yeah, that's a little bit different. So in this video, I'm just going to talk about some of the good, I guess, the pros and some of the cons of buying shares into this fund. So the very first, I guess, pro is that because you are buying a fund or you're buying it on the stock market, you can put this into a potentially, depending on where you live. In Canada, we have the tax-free savings account, so you can put it in some sort of tax sheltered account, right? So in Canada, we have the TFSA, and that means that any gains that we have on this particular or anything that's in there, it's all tax free. So example, if Bitcoin, if the Bitcoin fund goes to, let's just say you make 10x on it. Well, those 10x gains are tax free. You don't have to pay anything as long as they are in that tax sheltered account, right? So that's one of the pros. Now, if you think that the value of Bitcoin is going to go up exponentially or significantly, then this might be a good option to put in your tax sheltered account. Also, in some countries, depending on where you live, they don't pay capital gains. So, having said that, if you don't pay capital gains, and again, it's kind of like the same thing. If this here goes to, let's just say, you 10x your money, well, that is pretty much like all tax free, right? So that's one of the biggest benefit of having exposure to Bitcoin in the traditional investment world. Now, the other reason that I can think of is, let's just say you are someone who's not really tech savvy, but you still want exposure to Bitcoin, right? You still want some of your portfolio in Bitcoin, but you're not tech savvy enough to, maybe take care of those Bitcoins yourself. Maybe you're scared of uh, the wallet stuff. You're like, oh, no, I don't understand this wallet. I don't understand the private key, or I'm scared to lose it. Or, you hear or see of these horror stories of people just getting hacked or losing their Bitcoin. And you're like, you know what, forget that. I trust Gemini more than I trust myself with this. So uh, I am going to buy this. So that's another reason why you might want to buy it, right? So those are probably the two biggest reasons. Number one is that there's the potential of tax-free gains, and secondly is you want someone else to take care of those coins for you because you're kind of scared. Now, let's take a look at some of the not so good things about this fund. So, the very first is that, well, there's that saying, not your keys, not your coins. So, let's just say you are someone who actually wants to have that the bitcoins yourself, and you want to put it in a private key or in a wallet yourself that you control, where you have the private key too. So this is not good for that, right? Because again, you're not buying actual bitcoin, you're buying shares in a fund where the fund controls the bitcoin. So that's number one. The second thing is that there is a premium on this fund, right? So if you look here, the net asset value at inception, so when it was created, it was worth $9 and let's just say 24 cents. Now they issued it at $10. So that means you're paying a premium of what, 74 cents? So 74 cents off of this works out to be roughly, 8.23%. Now I've done the math, so it's about an 8.23%, assuming you bought it here. I mean, if you look at the premium between the net asset value as of May 29th and the, I guess, trading price, right? So this is a difference of what? I've already calculated it, and it's about 3.6%. So there is a little bit of a premium that you are going to be paying, right? So 11 $11.12 minus this here, so 1073, right? So you're looking at, I don't know what, maybe what the difference of whatever this is, and then divided by that, it works out to be about 3%, right? So that I've already done the math. So yeah, you're going to be paying a premium, so that's the second reason. The third is that you're going to be paying a management fee of almost 2%. Now, that might not seem a lot, 2%, but if, let's just say, you're going to hold this over 20 years, right? And I'm just going to use some simple numbers, right? So we use 2% over for 20 years. So 2% at every year times 20 years, that's 40%. So 40% uh, minus whatever, so that would be minus 40% of whatever it is your total is. Now, it's not exactly 40%. The real number is more like 47. I've already calculated it. But if you take that into consideration over 20 years, let's just say you've made uh, uh, mm, let's just say 1,000%. So you made 1,000%. Then you need to subtract the 47% from that 1,000%. So then you're really left with 950 percent in a gain, right? So as an example, I mean, yeah. So you're thinking, oh yeah, that's 2% is not that much, but after every year compounded, yeah, it can be. It can work out to be a substantial number. So that's the third thing, the fact that they've got like a high management fee. Now, the last reason is that if you are someone who's, I guess, maybe actively buying this or actively trading it, and you don't know much about trading, and let's just say you do a market execute. So if you look here, the bid is $11.01, and this here is 11.50, right? So that means that's a spread of 49 cents, and that's quite substantial. That's 49 cents off of this is about 4%, right? So a 4% spread, if you're buying or selling, that right there is the second you market execute, that means you're already 4% out of pocket, right? You pretty much need it to go back at least 4% and a bit for you to break even. Actually, probably even more, because if you factor in transaction fees and all that stuff. So yeah, that's something you might not want to do. I mean, it could work in your favor if you just put in a limit order and you just put like, let's just say 1102 or something like that, and then you just wait until it gets filled. But the fact that they've got a huge spread between the bid and the ask, that's yeah, that's I would say most stocks, they don't have a huge spread like that. So that's something that you might want to take into consideration when you're buying or selling this. So yeah. Anyways, those are some of the reasons why I think you should and shouldn't get this. Now, obviously, it's up to you on whether it's good for you. You're gonna have to look at the pros and cons and see which ones outweigh what. So yeah, but I guess the purpose of this video is just to kind of inform you of the fact that we have a uh, something called a Bitcoin fund, and that's something that you can now look into if you're looking at or thinking about buying Bitcoin in, I guess, the traditional investment world. So yeah, well, anyways, I hope you enjoyed this video, and if you did, please give it a thumbs up. If you are interested, please leave a comment down below, and I'll respond to that comment. I do check all the comments, so I'll respond back. And or if you have any questions, leave it down below as well. I'll respond back to that. And yeah, if you are interested in receiving notifications of my future videos, then hit that subscribe button. But other than that, thanks for watching, and I'll see you in the next video. Bye for now.